The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and we have markets. Record territory. How about it? 66, 66, 66, 66. And the S&P's up by 21 points. That's a gain of about 0.3%. NASDAQ 100 up a similar 0.3%, up 63 points, 24,414. You have the Dow. When are we going to get to 50,000 Dow? Right, we're at 46,301 this morning. Dow up 112 points or 0.25%. And the Russell up by 0.4%, or 9 points at 2425. Bitcoin backing off a bit. We're off by $2,250 at 115,000. Crude up by 49 pennies to 63.20 this morning. We jump to notes and bonds and dollar and gold. The 10-year right now, we're up by 5 ticks, so we come into Fed week. Wednesday, Federal Reserve decision. The president, well, he wants more than 25 basis points, but the market right now feels like we're going to get a 25 basis point cut. Higher price, lower yield coming into this morning. We got the 10-year at 4.04. Okay, 4.04. You jump over to the dollar. Lower yield, weaker dollar, 97.36 this morning, and a weaker dollar helping gold out a bit off of the lows of last night. We're flat on the session, but going to bed last night, gold down about $20. Bouncing back from that low to be flat at 36.86 right now. You jump over to silver, negative by 23 pennies at 42.61 right now. And yeah, some of the equities moving this morning. You jump over to Tesla. Now this one's a remarkable one, right? So Tesla's up $32. Elon, he buys $1 billion worth of stock. Okay, now here's the remarkable part of all of this, okay? $1 billion worth of Tesla shares is, what, 2.5 million shares if it's trading at $400? Okay, 2.5 million share purchase, right? The remarkable thing about that is that he owns so many shares that this thing goes up $32 a share, okay? He owns 15.7% of Tesla, which is something like 500 million shares, I believe, okay? Let's see what it is. It's something like that. And so 500 million shares of the company goes up $30 because he invests $1 billion, and meanwhile he ends up making $1.5 billion on the show of confidence. It's quite a back and forth, but nonetheless, he buys $1 billion worth of Tesla. Tesla reacting to that. You're going to open at 425 this morning, and yeah, we have highs out here of 439 from January. So you're opening at 425, probably going to have some volume in there for Tesla today as Tesla continues in the headlines. Okay, so we get Fed on Wednesday. You get retail sales tomorrow as well. But this one out here for Friday. Trump going to speak with Xi Friday with a TikTok framework reached. So we have Facebook a little bit lower today. He's going to speak Friday with Xi following talks between negotiators. Excuse me. The framework to keep the TikTok app running in the U.S. had been reached, and that Trump and Xi are going to speak to complete that deal. The terms, we don't know yet. They're going to speak on Friday to complete the deal, but we do have a framework. The framework is for it to switch to U.S.-controlled ownership. Now, this is the U.S. delegation telling you that China's agreed that they're going to give us TikTok. Can't wait to see how the details come out on that and why they're just going to give us TikTok and the U.S. is going to control it. Now, give us, not exactly what they said, but control it. Are they going to control the algorithm? So deadline this week to secure a deal to divest TikTok's American operations. And yeah, there's going to be more in focus than that, right? What's going to be on the other side of that stake if that's what they are going to give the U.S. control of? And yeah, so tariffs in focus. And you jump over the headline with Mr. Musk. Yeah, $1 billion worth of shares. He's worth almost $400 billion. So to put things in context, that would be like somebody worth $1 million spending $2,500 to buy some shares. That's what it is, percentage-wise. If you're worth $400 billion and you invest $1 billion in an equity, that's akin to somebody who's worth $1 million taking out a $2,500 investment. And imagine that that's a show of faith. And overnight, just by telling people you've done that, the stock that you invest in, you already had a 15% ownership in, and it boosted on top of it. And hey, I'm harping a little bit, but it is important to see the context. The other side of that is, he doesn't have to invest $1 billion in it. So he's investing $1 billion in it. And yeah, that's real money. It's really $1 billion. And yeah, the market believes that's a show of strength, and it sure is. All right, we jump around to some of the equities, as I mentioned. Meta shares down about $3 in the pre-market. There's the collapse on that news that it looks like there is a deal for TikTok. You jump over to Oracle shares, up by $8. Is Mr. Ellison going to get it? Who's going to get it? What's going to happen? Well, you got a little bit of an acceleration. Oracle's one of the ones in play there. You're up by $12 in the pre-market. You jump over to Amazon shares, higher by about $2 in the pre-market this morning. Google shares up by a few bucks to $2.44 this morning. Microsoft, on the flip side of that, negative by about $2 to $5.07. A little bit of divergence across the board here. And some of the volatility last week, Paramount Skydance, you were up to $20 in the overnight session. You're back to $18.93. Basically just above where we closed on Friday. Warner Brothers Discovery. See if we get any action on these equities or news headlines this week. Slightly, only 8 pennies off of where we closed on Friday. Quite an acceleration for them last week. And yeah, so Netflix and Disney, both of those trading lower on some of that news with Paramount and Warner Brothers. You see it, right? Netflix was at $12.50 before that news hit. You ended the week at $11.86. That's a quick $65. That's a quick 5% hit. Disney shares, not quite the same pullback. Netflix right now priced, you don't want to call it price to perfection, folks. But boy, they're firing on all cylinders, right? Can barely even see that type of a pullback we got when you go from $13.41 to $11.88. Almost a 10% pullback. Okay. We take a look at the S&Ps. So on a weekly basis, you had some decent volume. Last week we're talking about, taking a look at the weekly charts. We'll take a look at the NASDAQ 100 when we get back. But folks, we did not get above the prior week with volume, okay? September 1st week on only 4 trading days. Yeah, we couldn't get above it. We had 5 trading days last week, and you barely had more volume on the S&Ps. Nonetheless, we kick it off in higher territory today. We're coming right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. And yeah, we have divergence, right? It's interesting. Oh, you have so many of these equities right now, whether it's Tesla dramatically trading higher, right? You even jump around to the Microsoft, the Googles. Microsoft down $3. Google positive by $4 this morning, right? Amazon positive by a couple bucks. Nvidia, no, not the case. Nvidia down by a couple dollars, but you spiked down to almost 172 this morning. You jump over to Nvidia shares, and yeah, China saying antitrust. China takes antitrust very seriously, folks. I have to smirk, right? I mean, there's no such thing as there is, of course. They're talking about, it's just interesting in terms of antitrust is all about fair competition, right? So China talking about fair competition, but hey, nonetheless, they run the show in China. Regulators move against the chip company comes during Washington, Beijing trade talks. You think that one's a coincidence? Think they're just going to hand over TikTok and none of this is going to come into play? And what this has to do with, what they're using at least to make this argument is, Beijing approved a deal, okay, for an Israeli company completed in 2020. As part of that deal, NVIDIA agreed to provide access to China for those chips. The problem, of course, is that then the U.S. told them a couple years later that they can't sell all those chips, right? Trying to find the exact line of what they said. I was reading this earlier. There we go. Beijing approved the deal after NVIDIA agreed to conditions including guaranteeing the supply of its chips to China. Well, China should have known that that's something they couldn't agree to. This was 2020. Since 2022, the government has blocked NVIDIA and other chip vendors from selling many of their top flight artificial intelligence chips to China. So, yeah, they're upset. And that's what they talk about here. You know, NVIDIA's in a tough spot. Doesn't mean it's going to matter if it hits their bottom line. But yeah, you better believe they're in a tough spot, right? It had to halt the supply of those chips to China to comply with U.S. export controls, but that opened it up to criticism from Beijing. And they argue that they were violating that pledge in 2020. And they're going to use that for a bargaining chip. So NVIDIA, as is going to be the case, folks, always going to be in the middle, okay? It's just one of those pieces of volatility unknown that you're going to be dealing with when you're in NVIDIA. You always want to factor that in when you're looking at the China aspect of things in terms of those numbers, those growth numbers. But yes, they're getting hit this morning. AMD shares, different story. Up by a couple bucks to 160 right now. You jump over to Micron, quite a tear last week, continuing the trend up a little bit this morning to 157 right now. Broadcom, particularly volatile last week. We kicked things off at about 360 this morning. And yeah, we mentioned Oracle, but Oracle potentially getting a little bit of a lift, up by $14. It's continuing. I wonder who knows what, right? You start watching something like this. Doesn't mean they know anything, okay? Smart money could think. I mean, Ellison's already made the bid, right? He wants to be in on the Oracle action. How's it going to go to U.S. control? You better believe he may be a player. We find out. At least by Friday. We don't have the details yet. But nonetheless, Oracle up by $14 on that news. And then, yeah, Meta, Facebook, well, looks like their competition's not going to get wiped out by the government just yet, as TikTok is going to persist in U.S. control, at least from the headlines. That's what the U.S. is telling you. We'll see where the details fall. But yeah, Meta down by $3 this morning. And this one out this morning. Take it seriously, folks. It's been talked about. Public companies, one of the greatest burdens is having to tell the public how they're doing every 90 days. I mean, of course, it's going to make things easier for companies. But boy, folks, in the age where you see Oracle go up 40% in a day, because within the span of 90 days, things change so dramatically that the public deserves to know that information. The problem with this is you don't think people are going to know what's happening in a company over a 6-month period, insiders, that they're not going to have. The longer you go, the more unfair the equitable distribution is of information, folks. Okay? And so that's the real problem with this. And then it becomes a value of if the information is not getting distributed equally in a timely manner, then mark-to-markets are going to be swayed over that time. And yeah, he makes the case here. You know, they have a very difficult time planning for the long term when they have to tell the public how they're doing every 90 days. Well, you know what, folks? You don't have to go to the public. I used to make this argument for Elon all the time, right? The only reason you have to do that is when you want to raise public money. If you're a business owner, you don't have to do that. That's why a lot of businesses stay private for a long period of time, more so than usual, right? More so than historical. So you see it in equity like Oracle, that over the span of 90 days, the valuation can change by 40%, hundreds of billions of dollars. What do you think is going to happen when we go to 180 days? Oh. And what's tough here as well is that smart money knows that you can plan long term, folks. You know, that's where HODL comes in. So I don't quite get it. You know, I do get it, right? It's a gift to businesses, man. You're ending regulatory burden. You're ending the costs that go associated with that, for sure. Add an expense, though. Okay, add an expense, because there's like an inherent deal here where somehow you're making the case that great companies can't plan for the future because they're accountable on a 90-day basis. Tell that to Elon Musk, folks. Okay, tell that to Tesla shareholders, right? They're not swayed by the 90-day numbers, okay, because they're planning for the long term. So, as an investor, I like the idea, okay, that you're getting it. And the other side of that is, as volatility traders, options traders out there, all of that, pretty sure public companies are okay. The size of a public company these days, folks, yes, it's a regulatory burden. But remember, you're going to public for the money. That's the other side of that. When Elon was, all upset that he was not able to say basically whatever he wanted. Remember, he went out to Twitter, right? He says, taking Tesla private at $420 a share. All this stuff didn't turn out to be true. You can say whatever you want when you have a private business. You can do whatever you want. You can tell people whatever you want. But if you're going to the public for money, then it would be good to make sure that the public equally knows the information. And the longer you push it off, the more unequitable that information is going to be. We'll come right back for the open, folks. Don't go away.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&P's up by 24 right now on the open. That is a record print, folks. 66.70 up 25 points or 0.4%. NASDAQ 100 up almost 0.4 as well, up 80 points at 24,431. The Dow up an even 100 points at 46,296. And the Russell up by 8. We jump around. Tesla shares kick it off. $420. How about that? Taking Tesla private at $420, folks. $419.76, up by 6%. And yeah, Elon, he buys $1 billion worth of the equity. But man, you know, quite an easy way to print $1 billion on a Monday morning, folks. $1.5 billion, right? He's got about 500 million shares. Okay, every $20 up is $1 billion in profit. Yeah, and it's up $25. So you're up almost $1.4 billion right now on his $1 billion investment. You could consider it a show of faith. And it is, okay? Hey, if he thought it was tanking, he wouldn't be investing it. I'll give him that, okay? We jump around to some of the other equities. Amazon, up by $3 this morning, up 1.3%. We jump over to Meta shares, actually trading higher off of that, right? You trade lower on the potential that TikTok is going to be around as a competitor, and we bounce back near the open to be flat right now. Some of the other equities are a little positive. Nonetheless, Meta shares flat. On that news, Google shares up by 2.3%. Google continues the run. Oracle up by 4% to $304, up $12. Maybe they'll be in the mix when it comes to TikTok. Paramount Skydance down by 1.6%, $18.50. Warner Brothers Discovery this morning down about 0.2% right now. So it is Fed week, folks. Chairman Powell on Wednesday. Now, the Fed right now, they have a target range currently, folks, of 4.25% to 4.5%. Okay, the market right now has about a 95% probability they go 25 basis points, 5% chance they actually cut by 50 basis points. You go out to the December meeting, like I've talked about for some time, and the market right now pricing in about a 75% probability that they have 3 cuts. Again, we're at 4.25% to 4.5%. By the December 10th meeting, the market thinks we'll be at 3.5 to 3.75. You go out to January, it's split, whether they cut one more time, as in 4 cuts in 4 meetings. But you get out to March and it thinks it's happening. There's a 43.7% chance priced in the market right now that you're getting 4 cuts over the next 5 meetings. 4 cuts over the next, that's 100 basis points of cuts by March 18th. Okay, now a lot can change over that time. But the run it hot trade, okay? And yes, this is where I think they're assigning risk. And the Fed has 2 mandates, right? Full employment, price stability. They're always balancing those risks, okay? The risk to cutting rates is only that you're going to run the economy too hot. Now, even when you cut rates, you might be too late to the party and the economy's struggling, okay? But you have 2 mandates. Full employment, the jobs front has become difficult, like we've all seen with the jobs numbers, whether it's the monthly jobs numbers, whether it's the revisions. And then you have the inflation part of the thing. We just got a CPI print that was 2.9%. 2.9% year over year, okay? That's not 2%. I would love to pull out all the rhetoric from Chairman Powell when he was talking about we are going back to 2%, right? We will not stop until we bring inflation back to our target goal of 2%. Well, they're at 2.9%, and the market thinks they're going to cut by 100 basis points over the next 5 meetings. You better believe there's some risk. Doesn't mean it's going to materialize, okay? But I like to think of things as buckets of risk. And then you assign probabilities to those buckets. And so that's the only relative risk. Now, what I've also commented on, though, is that one of the benefactors or benefits that we would experience if we dealt with inflation is that we have runaway debt right now. And then our debt will actually be decreased in the value of future dollars if we devalue that dollar on a future basis. So if the risk right now is that we face an overheating economy that causes inflation, which devalues the future, and I know I'm like going on this fundamental, But maybe that's the best risk assessment to take, because if the other side of that risk, right? Look at the other side of that. So that's one of the side of the risk. Maybe you say, man, I wish Trump wasn't, and this is me saying this right now, I wish Trump wasn't interceding so much with the Fed, okay? It's becoming a highly political topic, and it's becoming partisan with your politics driving where you think the Federal Reserve should be, okay? With that said, if the only risk is that we're going to devalue the future value of the currency and they're going to have room to hike, now, I'm imagining how high the bar would have to be for the president to shift to a political leader that was chastising the Fed for not hiking and slowing down the economy. Okay, try and imagine that one in your brain, right? Try and imagine those Truth Social posts of Trump saying mortgage rates need to go up. Rates have to be higher. This economy is overheating. The inflation is crushing everything. Where is Chairman Powell on raising rate? No, right? So very different. So what is the bar? So there is a risk to inflation, because where is the other side of that trade where, what if we're overheating? Okay, so there is a risk to inflation, but that devalues the future value of the currency. So you set that side apart. The jobs front is real, man. Okay, so there is slowdown in this economy. But look at the other side of that risk, because I kind of like this side of the risk, but don't get flat-footed, folks, okay? Be aware of this side of the risk. Make sure you're protected if we face a bout of 4, 5, 6, 7% inflation over the next 2 or 3 years. It doesn't mean it's going to happen, but think about the fact that it could happen, okay? Make sure you have some assets. You see why gold's on fire recently, okay? But the last thing you want to do is dump all your assets and be holding a big pile of cash if that's a possibility, okay? Now, the other side of that, though, which is why I understand the push for the Fed to lower rates here, especially in light of where the jobs are, okay, is that the other side of that is, what if I said to you, we cannot risk inflation going up right now, okay? So as a result, we're going to keep rates where they are, which are restrictive. We're going to make sure we bring down that inflation. And one of the bifactors of being so ardent on the 2% deal is that our debt payable in the future is going to remain in the strongest value of the dollar denomination, because in no way would we ever allow there to be inflation which could inflate away our debt. I mean, I think you'd say to yourself, well, what if the R-star is at 2.5 to 2.75%, right? What if it's at 3% right now? What if these AI gains? So, be aware that I think that is a risk, and it might be a justifiable, reasonable risk, and no one's going to admit that, hey, man, we're not that worried if we get inflation because it's going to inflate away our debt. That's not what's going to be said, but it is a factor out there, folks, okay? And this is, I love the headline, the run it hot trade. Power stocks to record. Stocks are assets too, folks, okay? They're priced in dollars. And as long as you're living in U.S. dollars, equity prices are doing great because of the value of the dollar. We'll talk some dollar. We'll talk some gold. When we get back, we'll take a look at those gold equities. How about Vista? We're coming back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the Dow right now slipping into negative territory. So some of the Dow's most expensive stocks out there. Check it out. You got Home Depot shares down by 1% right now. UNH down by 1.2% right now. NVIDIA shares down by 1.3%. That's only $175 stock. Remember, folks, price only matters, which is a meaningless number, yet price of their shares are the only things that matter in the Dow. I know I say it all the time. Makes no sense. Nonetheless, Home Depot, yeah, that's a $420 stock, down a percentage point. UNH, Goldman Sachs is always going to be a big one, $783 stock, up 0.5%. That's wild, man. You go to a $43 stock. Coca-Cola, Verizon, Chevron. All right, Apple shares, let's jump to. So Apple catches a lift. I mean, you know, maybe on some optimism with China. Apple up more than 1 percentage point, up $2.50 right now. We jump over to Tesla shares, up by 5.6%. Some of the movers this morning. Oracle up by $14 so far. All right, let's talk a little bit of gold. So Fed in focus and gold, 3,700. How about it, man? Let's take a look at the weekly. So gold, okay, got above it on lighter volume though, folks. All right, that was quite a breakout the week of September 1st. And remember, 4 trading days that week of September 1st. Okay, so we get above it with less volume in 5 trading days. Now, it's a decent volume number over 5 days, right? You take out the September 1st volume, one of the strongest weeks we've had going back to June 9th in terms of where we were last week. But nonetheless, you take out those highs, you do it with less volume on the gold contract. You're trading at 3,700. Nice little reversal from the lows we had last night. Some of that, of course, being driven by the dollar action down to 97.30, and a lot of it getting driven by rates, of course. Now, some of these gold equities, folks. And this one comes to mind. Got a great question last week, right? What do you do with these levels? Vista Gold, folks, okay? Up another 20% today. You're trading at 217. And my dad was a real long-term believer in this equity. He used to interview the CEO all the time. In the last 6 weeks, folks, you're up 120%. This gold run's been going on for 19 months. And in the last 6 weeks, you're up 120% on Vista Gold. Pulling back in the 5-year weekly, we're now above the 1 to 2.618 expansion from where we were at about 30 pennies last February. You had a low of 32 cents. Okay, February last year. That's why I say this run's been going on since then. last week's move was big with volume, folks. That's the bottom line. Now, we'll see what this week plays out, okay? But we already have massive volume, right? Last week, you did 7.1 million shares. We've already done 2.7. 2.7. Yeah. Right? Look at the move we had last week. You're going to gap that with volume this week, man. Whew. And what happens with these equities, folks, it doesn't have to always be news. And doesn't even have to be news. Not always. You're talking about an equity right now. Come on, Thinkorswim. I was going to pull up the amount of available shares. Come on, cooperate. You're in there somewhere. I know you are. All right, it's not cooperating right now. This is an equity, folks, that on some days, as recently as last month, right, you traded 350,000 shares the whole day. Okay? We've traded 2.7 million shares already this morning. 2.7 million. You put it on a 5 million, 5 minute. We traded 1.1 million shares on the open for 5 minutes. The next one was 171,000, followed by a 400,000. I just showed you, folks, some days we're only trading 325,000 shares. Now, if you're trading this equity, okay, I still have Vista Gold, and I'm probably still holding it, okay, longer term. What I will say, though, is sell when you can, not when you have to, as Mr. Dave White used to always say. And this stock is one of those greatest examples of that, folks, because if you have a large position in this equity, it's difficult sometimes to get in and out of it, okay, if you have the position getting out of it, because you're dealing with an equity that on some days, as recently as last month, okay, I'm not going back years and months ago, as recently as last month, you had days where you traded 350,000 shares. So even when you're getting out to 10, 20,000 shares, which sounds like a large position, but folks, this equity was trading at 30 cents as recently as last year, right? So there's going to be many traders out there that might have positions of 10,000 shares. 10,000 shares was only a $3,000 investment last year, okay? It's a $21,000 investment right now. And 10,000 shares might represent 1/30th of the daily volume. So keep all of that in mind when you think this is not like an Apple or an Amazon or a Google or Tesla that you can just build a position, cherry pick a high. Now, you could do it today, okay? You want to get out, and that's the point. Make your decision. If you're going to hold it, because don't think that you can pull back a little bit and then pull the trigger and get out on an equity like this. We have massive volume in this thing, and boy, the volume's saying higher prices, okay? But that is one of the risks in trading some of these equities. And hey, that's the risk that you take for getting a 7-bagger, right? Where you go from 30 cents to 210 over the course of a year and a half. And it's something to consider, though, as you think about going forward and holding. Because, boy, this thing is on a run, folks. From 60 cents this year to 220. Now, historical context is important. Okay, not saying it's going back to 75 bucks. The world was very different 32 years ago when it was trading up there in the late 90s. But you don't have to cherry pick even those, okay? This thing's made rises to 12 bucks. It's made rises to $4 on multiple occasions. It made a rise to right about where we were, the $2 range, as recently as 9 years ago. But boy, this is a run to 220 on Vista Gold, trading higher. We jump around to some of the silver equities. It was First Majestic last week, trading higher again by another 8 pennies or 0.8%. We do own that one in the gold report right now. We jump over to Hecla, another silver equity, continuing the run, man. Look at this, up by 45 cents, up 4% right now for Hecla. How about that weekly last week, folks? Look at that one. Talk about strength, man, these silver equities. Silver, just off the highs at $42.65. We jump back to that gold contract up by $11 at $36.97. You jump over to copper right now. Copper's been rising recently. Look at that weekly, right? We go back to a daily. Higher highs, higher lows. Copper up another 3 pennies right now at $4.68 for copper. Jump around to some of the copper equities. And I was looking at this one in the gold report. This could be a nice breakout of the downtrend channel. Okay, you break out, you come back, you test that channel. The only tough part here is, boy, look at that volume, right? But that was some nice buying last week. Higher price, didn't quite get above the highs we had, though, at the 110 area for Southern Copper. Look for that area as you have some real volumes from the selling on July 7th. Tesla, up by $20, up 5% this morning. Amazon, up by 1.3% right now. Mr. Larry Ellison, Oracle, up another 4.4%. Something tells me he might be coming for TikTok as well. He's on a run, baby. Folks, we'll come right back. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Amazon up by 1.3% right now. NVIDIA shares, we're down by about 1%. You jump over NVIDIA, yeah, down 0.9%, 176 right now. Tesla shares higher by $23, up by 5.9% right now. Meta climbing back into the green. They were negative this morning. You look at the action, quite a dive low, and the market says, look at that volatility from 750 to 764, $15 like it's nothing. $15 like it's nothing when this thing was trading at $88 just 3 years ago. Quite a run for many of these equities. Speaking of runs, Netflix shares. If you didn't catch it this weekend, the Canelo Alvarez versus Crawford, it was a great fight. No knockdowns, Great fight by Crawford. If you haven't checked it out, I watched the 2-part series on Netflix that kind of led up to it. It's just brilliant how they all do this, right? As in, you're creating content that is just basically promotional content for the live event of the boxing match. So Netflix hosts the live event. They host the live boxing event, a little late for my taste. I went to bed Saturday night, couldn't catch the main event fight. Woke up Sunday morning, thankfully stayed off social media, didn't see the fight, got to watch it Sunday morning with my morning coffee. They showed ads on there, of course, and Terrence Crawford remains undefeated. Great fight, and let me tell you, man, Canelo Alvarez, gracious in defeat, as you can be. So respect to both of those fighters. Great fight, man. Great to see it, and kind of cool after watching the 2-episode series leading up to that, chronicling the 2 fighters, their training, their families, their lives. You can see how they've changed the world. Netflix, folks. You can see it in terms of, and Paramount's going to do the same thing with UFC. And so that's part of it as well. But Netflix shares flat this morning. We jump over to Paramount, up by 0.6% right now. That's a 5-year weekly. How about that one? Markets. Powering hot. It's Fed week, folks. They're expected to cut on Wednesday. I appreciate you kicking your trading day off right here with me at TFNN. Stay tuned. Basil Chapman coming up with the Tiger Technicians Hour, folks. Have a great Monday, everybody.